Hello and welcome. My name is Joe O'Mara. I am the head of aviation finance with KPMG. And on behalf of KPMG and Airline Economics, I'm delighted to be joined again for the purposes of our Aviation Leaders Report, John Plueger, who is the CEO of Lease Corporation. John, thanks so much for joining us again in what I hope will be our last Zoom discussion as we do this report. I should say we are recording this in the middle of December. And before we maybe hit into the meat of the discussions, why don't you tell our listeners and watchers, who all I would say will know, just a little bit about Lease Corp?
Sure. Well, thanks, Joe, and welcome to everybody. And thanks for watching and joining in. And I would just add happy holidays to all of you as we're in the middle of December. So Lease Corporation was actually grown when myself and Steve Haase left ILFC, and we started Lease in March of 2010. We started buying airplanes, and we had a great investor base at the time. And then we went public on the New York Stock Exchange just about 13 months later, in April of 2011. We have continued our business model of primarily growing through our order book, and sitting here today with the most recent announcement that we just made at the Dubai Air Show for 111 additional aircraft. AL sits now with the largest order book of any lessor space, with Boeing and Airbus specifically combined, which gives us a great platform for growth. And that also gives us a total fleet size just under 900 aircraft when you add in our current fleet plus our managed fleet of almost 100 aircraft, plus the additional forward orders that we have now going through 2028 as a fuel and an engine for growth. We enjoy investment grade ratings, BBB from S&P and Fitch, and A- from Kroll. And we've enjoyed those ratings for many, many years. And we believe that the industry, and we specifically, are well positioned for potential upgrade in those ratings as we come through the pandemic and air travel resumes to normalcy, however long that may take. We're headquartered in Los Angeles. That's our main office. We also have offices in Dublin, Hong Kong, and Dallas. And that's about it.
Great. Thanks, John. And you mentioned there, obviously, a huge breadth of customers covering lots of geographies. And you talk specifically about the recovery there whenever we get there. As you look out over 2022, what are your thoughts on how that recovery will progress and just how it will be fragmented geographically?
Yeah. Well, I think it will continue the track that we have seen so far, which is we are seeing recoveries domestically, locally. The international marketplace is still slower, but that too is recovering. Despite this new Omicron variant, I would just point out that we had a Delta variant also arise a number of months ago. And I just believe that we will likely see other variants come about over the course of the next year, 2 or 3. And so my own personal view is that I do believe that we will move as an industry towards an international vaccine concept or an international vaccine passport. And although perhaps annoying, I think taking a COVID test before an international trip will become just a part of normal international travel, just like going through a TSA. You go back 20 years ago, we didn't have TSA. We had the lines that we had to go through. So I think that's just a byproduct of the world that we live in. I have no way to predict it, but that is my assessment. And so we have clearly seen a resurgence now in traffic, again, led primarily domestically and within geographies and continents. And that has fueled a significantly increased demand in single-aisle aircraft, particularly new aircraft, which is our main business model. We're seeing that, quite strong now, and that's one of the reasons why we recently placed an order with Airbus, which was almost all single-aisle aircraft. That did include, for the first time, 7 A350 freighters, first time for us and for Airbus, for the lessor to be the lead launch customer on that aircraft. And we ordered a few incremental A330 Neos. By the way, those are all placed. So, a broad statement, I think, of our confidence in the future, but certainly not born by sheer optimism, actually born by a lot of data and placements that we are seeing today. driving initially the single aisle marketplace. And I think that's going to continue. Interestingly enough, the 787 pause in production, while not a positive from an industry point of view, in that there are these quality escapements, you don't want this problem to continue, has also given a bit of breather to some airlines, yet there are other airlines that do need these aircraft. And as testament to that, you just saw, for example, American Airlines announce that they were going to curtail their summer schedule. Why? According to their announcement, is because they couldn't get their 787. So overall traffic is slowly increasing, the pace of which may vary. A bit of a dip happened with the Omicron variant announcement and the fallout from that. But I think I do still broadly see an overall recovery going forward. And the demand on the new aircraft side is driven by that, but also by strong environmental initiatives where airlines are seeing this as an opportunity, not only to get more efficient aircraft, better payload range, but certainly to advance their environmental initiatives.
And John, that probably a lot to unpack in there. And some of it is you talk to that a demand for new aircraft, which is clear. And we might touch on some of those climate concerns in a moment. We've obviously come through such a challenging piece over the last 20, 21 months for airlines, massive balance sheet stress. And we've also seen a broadening and deepening of relationships between lessors and airlines. Can I ask you your thoughts on how the pandemic, or will the pandemic, give rise to a long-term and material shift in the percentage of leased aircraft we will see looking out over the next 12 or 60 months?
I think it already has. And yes, I believe it will continue for the foreseeable future. And when I say that is that airlines very much need to recover their balance sheets. They need to get back to financial profitability to restore liquidity. And, up to now, most airlines have either drawn from governmental resources or ownership, where there was governmental ownership involved in the airline, or they've certainly drawn capital from their shareholders, other debt providers. Debt capital markets have been very robust, almost anything you can think of. And then finally, of course, the lessors have provided a huge bastion of capital. And as evidence of this shift this year in 2021, when you combine Boeing and Airbus together, leasing accounted for 60% of the deliveries in total between Boeing and Airbus, and aircraft delivered pursuant to some form of lease, whether it's sale, leaseback, order book, finance lease. So clearly, a capital-starved industry very much needs the leasing component. And I believe the lessors globally, certainly Air Lease, has stepped up and done what it is needed to do, whether that is providing aircraft from our order book, while an airline maybe defers their own for a little bit, or you name it, doing combinations of sale leasebacks to help airlines and placements from our order book. We in particular, we're not a sale leaseback player, but we use that sale leaseback as a tool, especially using our management companies to do sale leasebacks accompanied by placements from our order book. So, it's very hard to say 5 years from now, but certainly during this period of financial and balance sheet recovery for the airlines, most certainly the airlines have in fact, looked to leasing in a much more significant way. I do see that continuing in 2022 and probably 2023 and beyond.
And can I ask, and I appreciate it's the great thing about a 5-year prediction, John, is no one can prove you wrong. But just to ask you, if you were, do you think 60 is, let me ask you a different question. Is there a ceiling, right? Or what is the ceiling on that percentage of leased aircraft?
I honestly don't know. I mean, frankly, I thought 50 was probably about where we would be, but I think the pandemic has clearly driven that well beyond 50 into 60. And it's very hard to say whether that's going to be sort of the max or the steady state going forward. It's just simply a function, I think, a lot on the health of airline balance sheets going forward. And I see that still being strained in the next 2 to 3 plus years. Having said that, once you've delivered that much into the marketplace, once year after year for 2-3 years in a row, you have 60% or so of the leasing content going to the marketplace. It does, I believe, create a certain level set, a certain momentum. And I think that airlines, it gives them an opportunity to see that leasing continues to provide advantages to the airlines in terms of flexibility, capital. And so kind of this increase born of necessity, I do believe will stay probably closer to 60%. I'm guessing. I emphasize I am guessing. But certainly we have the data in 2021 to indicate that's the case. So how much over 60? I don't know. I mean, airlines will certainly continue to order their own aircraft. The industry depends upon it. And we as leasing companies and ALC as a lessor very much want airlines to continue to order their own aircraft. So I would be personally surprised if we went above 60 or materially above 60, but I was wrong about 50. So
and to ask, maybe just to pick up on a thread in relation to OEMs, and look, you're in that small population of lessors, and maybe very small population of lessors with material orders, as you say, with the OEMs. Do you think the pandemic and talking to that, macro factors that might change around leased aircraft, do you think that changes how OEMs interact with lessors? I chat to some leasing companies and they've got gripes. I'm not saying you've had those, John, but you're probably in, as I say, a more privileged position with the size of the orders that you have. Do you think OEMs start to look at lessors a little bit different coming out of the crisis?
I do. I do think there is greater differentiation by the OEMs as two different lessors. The OEMs run their business and they rely on lessors for different things. And so I think there is greater differentiation based upon which lessors have been able to place their aircraft successfully and continuously during the pandemic, who has stepped up, which lessors have continued to bring the OEMs new airline customers for a certain aircraft type that is usually normally followed by direct orders from an airline. And I think the OEMs also will take their cue based upon feedback, which they hear from the airlines across various lessors, who's had good experiences, who has not. I think one common theme that we hear, certainly in some of the large scale placements that we've been doing recently and more to come, you'll see more announcements to come, is as important as the lessor's own certainly pricing and flexibility and is strength, continuity, and long-term views. Because as we go forward into what is still admittedly an uncertain future for the airlines, or less certain than it was certainly pre-pandemic, the airlines want to be able to deal with reliable leasing partners in general, but certainly on the leasing side, as leasing captures a larger and larger percent of deliveries and how airlines finance their fleets. And so having the confidence in a leasing provider who will be there 10 years, 8 years, 12 years down the road when that lease terminates, and who that airline may have to rely on for ups and downs and things that come up, has become extremely important. So I do think that the OEMs take that account, and they take what they hear from our mutual airline customers as well, and they take all of this in consideration. So big summary, I think the OEMs will differentiate lessors more. I think they will continue to work closer and most closely with those lessors who they believe can be good partners to them, further distribute their product, work very cooperatively on key campaigns. ALC has always been on the forefront of that, working for mutual solutions across, a win-win-win across the OEM, the airline, the lessor, and large-scale placements, particularly with the new aircraft type. That's become more important than ever. And then, of course, financial strength is a given and a necessity, and an investment-grade balance sheet certainly adds to that. So, yes, I think we are more important to the OEMs, but not just because we have money. I think it is our long-term view on this industry and our history, our report card, if you will, not just with the OEMs, but with the airlines, that's going to continue to drive a differentiation in the view of the OEM, and by the way, in the view of the airlines.
You mentioned a point earlier, Johnny, and brought it up again there, and investment grade status. And you've obviously had, from a funding perspective, it's remarkable on the standback side, the quantum of funds you raised this year and the rates you've raised them, right? And you're not alone from an IG lessor perspective, and I know it speaks to the broader macro environment. But your thoughts around how receptive you think the market will continue to be for investment grade lessors on unsecured issuances? If you look out into kind of next year, do you still see that kind of low interest rate market prevailing for lessors, or what are your thoughts?
Yes, obviously the concern there is with inflation, and we are in an inflationary environment, and so the question is, what will the central banks do there? But certainly for the first quarter or two, I do believe that robust capital will still be available through the investment grade market. I think that was actually very pivotal for ALC, and our strategy, which has always been from day one to maintain strong investment grade ratings, has certainly carried us very, very well during this pandemic and during times when others started to struggle a bit for financing. And so that will continue to be a hallmark for ALC. And I do think the debt capital markets have been very, very robust and remain robust in all the issuances we've done. I think it looks to be so in the next quarter to two. Again, if we are looking at an increase in interest rates that comes with inflation, those who have the highest rated balance sheets are going to still enjoy the lowest cost debt. And just generally speaking, if you look back over history, when we get into an inflationary environment, generally speaking, that's good for lessors because higher interest rates and higher inflation tends to bias a purchase decision versus a lease decision slightly in favor of leasing when capital is still scarce and the cost of money goes up. So I feel pretty good about the future, and I still think we will have a very good debt capital market to support the growth in our business, new aircraft deliveries for the foreseeable future.
Keeping maybe the capital markets and a bit on the ABS market. So a channel you guys have both been involved in and pioneered in, if you think of the tradable E-note structure and the ways you've gone to that market, as you say, building out your managed book as well through whether it's the Blackbirds or the Thunderbolts. Were you surprised at how quick, and I appreciate they've predominantly been debt issuances this year, not the tradable E-note piece. Have you been surprised at how quick the ABS market bounced back? And is it something you see yourselves returning to in the near term?
Well, it's been good to see it return because I think that's become a critical pathway and a critical resource for aircraft in general, certainly for the leasing industry. We, as you point out, have taken advantage of that marketplace. So yes, I've been encouraged to see it return. I still think that equity intensive ABSs or E-notes are always still today the most difficult to sell. And I do think that the investors in those E-notes now are much more credit conscious than they were in the past. They tend to look towards the larger, more established airline credits. And I think that will probably continue for, into certainly the first half of this year. But I do think that there is look, one thing that has surprised even me as a full career, lifelong member of this industry is just the amount of money, debt and equity capital that remains available to this industry, to lessors, et cetera. I think it's a real testament to how aircraft as an investment class, as an asset class, have done really, really well despite this pandemic. So as we have publicly stated, we are, now gearing in 2022 more towards resuming a more normal level of aircraft sales, and we think that the ABS market will facilitate that. Our managed platforms have done well, and that's our report card, I guess, in those. So remains to be seen. There's always a little bit of cloud of uncertainty in this environment, but I feel pretty good that the ABS markets are returning. And I do think that despite a little more focus on the credit quality of the portfolio that is put in front of these investors, they themselves can read the traffic data. They themselves see the continued gradual improvement in traffic, certainly the demand on the single aisle side. And I think all of these factors are appropriately taken into consideration by ABS investors, both on the debt and the equity side. And I think that will continue to grow in 2022, or recover, I guess you would say, in 2022.
On that theme of investors, you're one of the very few publicly listed lessors, and as you say, both going out then the unsecured market, whether you market ABS or not, you have a good handle on that investor space into aviation that we chatted about. Have you seen trends over the last 20 months on either capital that has entered or departed the space?
Well, I think, yes. I mean, there has certainly been consolidation in the leasing industry, but at the same time, there remains new capital that's coming into the space from a variety of sources, some of the bigger private equity names, and that has continued. So while perhaps some have exited, some of the faint of heart have exited, we have this phenomenon where both things are happening. You're getting consolidation, but at the same time, you're getting new capital entrance into the marketplace. But when you think about it, Joe, looking back over the past 10 years, that has been the case. I mean, every year in interviews like this and in panels and in articles, there was always talk about new entrants into the space. 10 or 15 years ago, it was all the new Chinese lessors. So I would just say that that's really nothing new. I think those coming into the space see a recovery road ahead. They want to capture that recovery. They want to be in on the initial phases, and so that's understandable. At the same time, it's given other lessors pause that perhaps they might want to grow a little bit more, have a bigger scale. We're very happy with our scale of almost 900 aircraft, and now the largest order book with Boeing and Airbus combined as of today. And so I think these are just natural, normal aspects that we're seeing. So long as aircraft remain to be a good asset class to invest in, and they are, coupled with, I guess, the tailwinds, if you will, that environmental sustainability is adding to the need and demand for aircraft, it's still a very good looking investment going forward. So I think what we're going to see is really what we've seen in the past 10 years. There's going to be new entrants to the space. But for some of the reasons that I mentioned in the past, no matter what your name is, no matter how big your name is as a new entrant in the space, you could be the largest private equity firm in the world. I'll harken back to something I mentioned before. That's great, but that's not the de facto for airlines or OEMs. What's most important, and what well-established lessors bring to the table, the new entrants do not, is a track record, a proven track record of working with airlines now in the most difficult several years that has ever been beset upon the airline industry. When we started ALC in March of 2010, while we were confident that we had made a good names for ourselves, the most often uttered phrase in the initial few deals that we did, or when we first hung out our shingle, so to speak, was inbounds from airlines that we had helped for many, many years at ILFC. And the common thread was, I remember when you guys helped us here or helped us there. So good on you, good luck. Let's see if we can do some business. And that has stayed with me all through this time and has really become a hallmark, at least for our company, in this pandemic. And if we can continue to help airlines, work with them in a very difficult time, that's actually a huge, huge, huge advantage over anybody that's got unlimited money.
And it's a really interesting themes there. As you say, we've seen that, you know, a bit of some significant consolidation start of the year. We're coming to the end of the year, and we have a lot of rumored other consolidation that's coming. And you're right, we've seen that in the new side of private equity coming in, new platforms. And look, has been the case, or yourself and a lot of your colleagues, people recycle, go again, sometimes build something incredibly impressive again. How do you see pricing going? Can I ask you? So we as you say, some consolidation that's there. It's a question whether you need super scale to be relevant. I'll come back to that in a second. How have you seen pricing evolve over the course of COVID? Has there been a COVID bounce to pricing, or is it kind of where you were 20, 21 months ago, albeit that the credit risk now is probably a much more difficult question to answer?
Yeah. Well, the credit risk is more difficult because it's become more acute. But I think, look, at the end of the day, pricing, if you will, and the most obvious, I think, what you're talking about there is lease rates. That's our business. Pricing follows supply demand. Yes, it also follows interest rates, but that's usually a delayed response. Pricing is, even today, largely a function of supply and demand. And so as we've seen improvements in recovery, as the environmental push has added to airlines' desires to modernize their fleets, yes, we have seen a significant improve in pricing, I would say, especially in new single aisle aircraft from our order book. That has become, that is a very, very noted aspect that we're seeing. And again, formed the fact data and the analysis behind our most recent order with Airbus for 111 aircraft, which was mostly all single aisle. So I would say pricing on the new aircraft, new single aisles is strong and growing, particularly A321neo and the LR and the XLR variants, of which we're launch customers. And you know, I would say at this point in time, pricing is at least at where it was in 2019 on that product, perhaps even a little bit greater in some cases, especially with the LR and the XLR A321neo. But as well, the 737 MAX also is recovering and is recovering nicely. It's performing well in the marketplace. And so demand is increasing for the MAX. And so lease rates have, on new aircraft placements, have moved noticeably northward. And as well, the 220, we firmed an option for 25 of our 220 order. We had ordered 50 plus 25 options. We reaffirmed that option in this, we converted that option to firm order in this go around. That airplane is growing now very strongly in demand. So, you know, there's nothing magic here, Joe. I think largely and first and foremost, it follows the demand supply equation. You know, midlife wide bodies, you know, are still a tougher pricing point. However, with so many carriers getting involved and packing these wide bodies with freight as much as they can, even to the exclusion of passengers, with the freight rates that are there, there's actually been a fairly significant, I would say, shift. We have more airlines now asking us to extend our wide body leases. Now, they're not at the rates they were before, sure. But we're seeing these extension requests partially, or in some cases largely, driven by the fact that they're being used for freight. And freight rates are so high, so they're able to be used primarily in freight with little passengers. So that too is showing stability and recovery. And what I would say was probably the most hard hit of the marketplace, midlife used wide bodies. Now, we have very few of those. But those that we do have that are approaching 8 or 9 or 10 years of age, you know, for the most part, we have been successful in extending. And I think that trend is continuing, largely being driven by the freight and the cargo side.
And actually, just on cargo, what what specific challenges do you see in that market? As you say, you've gone there now in a real way, and you'd like to think that the macro trends are going to continue. But how different, or is it materially different to what you do with commercial aircraft, commercial passenger aircraft, I should say?
Well, no, it's not materially different. I mean, the aircraft are there. They have one great benefit in the cargo and freight side is you don't have all the optionality on the interiors. So many different seat providers and in-flight video video systems, galleys, and so in many ways it's actually simpler. Yes, there are different cargo loading systems for sure, but the optionality is actually much simpler and much more streamlined. The type of carrier that we are dealing with here, I mentioned earlier credit decision. One nice aspect of our A350 freighter order is we do believe that the caliber of airlines that we will be leasing these to are I guess you would call it an upper caliber carrier. Certainly a large global carrier. And you have to have well-established freight and cargo markets. And so, part of it is part of our equation there was this is a further investment in the larger carriers globally and the importance of freight in their business. So from a strictly airplane point of view, it's actually simpler. I think the big question is typically the freight marketplace has been much more sporadic. It's fluctuated a lot more if you look back 10 years. Now with the event of e-commerce, I think that's become a great stabilizer, and that was a tremendous influencer in our decision to enter that marketplace. I do think e-commerce clearly is the growth engine, is here to stay, but it's also provided tremendous stabilization in that marketplace, which wasn't there before. Even we project, if you look forward 2, 3, 4 years, and we all hope that the wide bodies will largely be reintegrated back into service and will provide all that additional freight capacity. Even with that, we think there's sufficient demand to warrant a separate investment in new dedicated cargo aircraft. And new aircraft remains our mantra. That's our business model, which is why we went for the A350 freighter. Not to say we wouldn't do some conversions, we may, but our wide bodies are not that old. And generally speaking, we have a very young fleet. So it's certainly possible in the future. So in its simplest way, we have pretty much the relationships already with the larger flag carriers. We know how to order aircraft. Cargo aircraft are actually simpler, so in that way they are advantageous. And we'll see how the market develops. We have a lot of confidence in that market going forward.
Can I take you back to a couple of points? A point you've touched on a couple of times, John, which is around that environmental challenge and climate change and ESG, and we know it's going to become more and more important as time goes on. Can I ask you, as one of the largest aircraft lessors in the world, is it as of right now having a significant impact on your business, from how you can raise funds, how you deploy capital, the questions you're getting from investors? As of right now, how big an impactor is it on you as a lessor?
Well, I think it's a big point of focus, particularly for equity investors. This is being raised, and I think that's one of the reasons they love our business model. Because I believe, I think it's well known that the largest accelerator towards environmental sustainability improvement is operating the most efficient, least polluting large commercial aircraft that you can buy today. And that's what our order book is. So I think it is an element that equity investors talk to us about. They see us as having to help provide part of the solution there. On the debt side, probably not as much so. We have not issued any green bonds, so to speak. It's not as large a focus on the debt side. We've had huge reception to all of our debt offerings. 3, 4, 5 times, 6 times oversubscribed. And that element really hasn't been woven in to the bond market, at least as much as I can see. Now, perhaps it's a given that all these, investors who are oversubscribing probably like this fact. How much it enters this fact of our business and the sustainability aspect, how much of it enters into their investment decisions when they bid on our bonds, that's less clear to me.
Yeah, and I think it's one that's going to be interesting to see, as you say, how it'll play out over the next couple of years.
Mm-hmm.
In closing, John, can I ask again, as I say, we're 12 days till Christmas. How optimistic or otherwise are you for 2022 when you look at the broader aviation market and then for ALC?
Well, I am optimistic. I do think we are on a recovery phase. Every time new markets open or governments open up or borders open up, you see an immediate rush of traffic. That's just evident everywhere across the globe. And so at its most fundamental level, global air transport is a vital necessity. If it were not by the airlines, if it were not the case, you wouldn't have huge government support across the globe for the airline industry. People need to travel, and goods need to be moved about. That will never change, and that will do nothing but increase over time. How we deal with the mechanics of that travel, the little things we have to go through, excuse me, to make it happen, I don't know. All I know is the fundamental demand is there, and you can see it every single day in the opening of markets. People naturally have concerns about traveling or social gatherings in this pandemic era. But I do think the world evolves and governments evolve and behaviors evolve. And I think we are evolving towards a route that will include very much so continued travel, robust travel. I've seen it in my own family. I've seen it in friends. That initial hesitation, now that people have been fully vaccinated and most have gotten their boosters, there's much more desire to go and travel. So I'm quite confident that 2022 will see a continued improving environment, continued recover for the airline industry. And so I'm actually very optimistic.
John, as always, I'd like to thank you for some superb insights on behalf of KPMG and Airline Economics. I wish you and ALC a very, very profitable 2022. Thanks, John.
Well, thanks so much, Joe, and best wishes to you. And again, happy holidays.
Thanks.
Bye-bye.